Now you bought Bitcoin at 55k or Doge at 70 cent, because according to the statics, most of people enter the market at the late stages, and after it you got stuck into the trade in the last 3 months, or you decided that I will hold that diamond hands title. That is cool, but don't let your feeling take over you. The important is, what should you do to decrease your losses? Let's have an example so you understand what to do. Then I will explain it in details. Now your capital is 55k. You bought 0.1 Bitcoin at 55k instead of whole 1 Bitcoin at 55k, and then you bought again at 60k and at 65k. You know that Bitcoin is going to 100k, but it dropped. You saw it at 50, so you bought, and at 45k, 40k, 30k, then it went back again to, and you bought again at 35k, 40k, 45k. Now you bought 10 times, each time was 0.1 Bitcoin. Now you bought 1 Bitcoin as you wanted, but instead of 1 Bitcoin at 55, you bought 10 times, each time 0.1 at different prices. I think you know where that is going. Are you up or down? Despite you buying from the top of the top at 65k? Let's do the math, cause your mind will be blowed. To calculate the average of the price you bought at, let's add all the prices and divide it by the total times. $46k. Despite the price going down around 60% from the top where you bought the first 3 times, but you would still be up when the price of Bitcoin hit 47k and you could sell on profit. That is ridiculous, to be honest. This is power of dollar cost averaging, which is the best strategy any holder can do, and 99% it will grant them winning. But on only one term, the price should go up to about half what it lost. But the golden key here is don't put all your eggs in one basket, or don't buy with all your capital in one time, just divided them and at every price mark go buy. It's up or down, or you could determine it by time, like each first of every week you will buy with certain amount. Let's say I will invest 10k in crypto, so each month I will invest $2,000. Now let's make it weekly. Each week I will buy worth of $500, no matter where is the price or no matter what social media or YouTubers are saying, just buy blindly. That is the most powerful tool a normal person can use to ensure his win in such a volatile market. And in long term you will make crazy gains, more than the holder that bought with everything at once, because you will have the chance to buy from the dip, which no one can predict, but with buying every week or maybe every day, you can do the math, you will ensure that you will get that bottom. Now I am done with the holding. Let's do our compare with swing trading from the last video to see which suits you. Cons of swing trading: that is more expensive than normal holding, but it's not close to the day trading, since there is a big time between buying and selling that it could reach 2 days. So the fees of swing trading is close to buying and hold, more than it's close to day trading. Secondly is uncertainty and fear. If you are someone that is afraid to lose and you will let your feelings take over you, then don't trade. After all, if you saw the last video, you know that we have a lost trade there. And number 3 is the time. You maybe forget to check the charts every day, so you will miss the opportunity to open the trade or to close it. By the way, there is a solution to this problem, but that is in another video. We don't want for our video to be 1 hour. The last one is some coins with no volume and you can analysis it accurately. You will just need to hold like Doge or low cap coins. The pros, as we saw in the last video, you will have better and bigger returns. You can build a real wealth through cumulative gains. After all, with the high risk, the high reward comes. Let's jump now to holding. But we will add dollar cost averaging to holding, since if we compare holding alone with swing trading will beat holding no matter what. The cons of holding is you will have your money always in an open position, so if something urge happened and you want that money, you will probably need to sell, and it's 50% chance you will sell on lose. Secondly, you won't have that stupid gains of trading. To the pros, buying and holding eliminates the guessing. You are guaranteed to win 99% of the time, this 1% in case of the fall of Bitcoin, but at that time you are not alone. It will be doomed to every one of us. Secondly, it can help quell emotional decision making. You will be chilling all the time, because you seeded your time and you know you will buy no matter what, and you know you will win at the end. If you wonder what about me or what I am doing, I use both of buy and holding with cost dollar averaging with day trading. I trading daily to make a money, obviously. Then I separate this money to 30% and 70%. This 70% is 25% and 45%. 30% I add to the trading balance so I can maximize my returns by making my initial capital bigger, and 70% I normally invest 25% in undervalued coins and 45% in top 10 coins, mainly Bitcoin and Ethereum, and of course some Cardano and Sol and Polkadot. Fast example, if I made $100 a day, $30 are going to the trading balance, now we have $70. $25 are going to low cap coins as a high risk investing, and $45 I am down to invest in Bitcoin or in Ethereum. That was the video for today. I would be happy and satisfied if you learned anything new. If you had any question, feel free to write it and I will answer it. Till the next video. Goodbye.